What would be the fallout here if the House resists whatever the Senate is trying to do? That is assuming on the health care thing the Senate does come up with something, all in an effort to try to proceed with tax reform, and that doesn't happen or gets delayed. The CME Group Chairman and CEO Terry Duffy on how the markets might react. Terry, always good to have you. Thanks for coming.
Neil, thank you for having me, my friend.
What do you make of that argument that something is better than nothing? The view seems to be it's not perfect, but it keeps the ball advancing to get something that would be better than Obamacare is presently, something that would be better on the tax front. But there's hell to pay if the markets don't get either.
So you know that I am not a health care expert, but I can't help myself. I will weigh in on one of the things the congressman did say. And what he said, that we could have an affordable health care in a free market system. In a free market system, I like to remind my friend in the Congress that free markets go up and down. It doesn't mean it necessarily will be affordable. So that is the one and only issue I would even raise. Outside of that, Neil, I'll stick to financial services and get out of the health care bill.
As I should as well. But one of the things that I do know, and we're looking at the Dow, Terry, and what's been happening, is that a lot of it, I think, has been built on expectations that hook or crook, controversies with Russia notwithstanding, that they will get what they want. They will get fewer regulations. They will get lower taxes. They will get some sort of revamped Affordable Care Act that will be more market-friendly than the one we have. Now, without getting into the weeds on that, much of my premise is built on the belief that these guys still see it happening in 2017. Do you?
You know, it looks like a pretty big lift sitting right here, Neil, but you never know how they're going to progress. It could go, you know, one thing about Washington, you and I have been around a long time and seen it. It can go very slowly, which it normally does, or it can go quickly. So we'll have to do a wait and see. One of the things I do know when you look at the markets, you know what, the interesting thing what Chairwoman Yellen said today is that she wants to raise rates. One of the reasons people are chasing the market maybe a little bit is not because of tax policy or not because of health care policy. It's because of interest rate policy. You know as well as I do, these markets have been, you know, nobody can invest in fixed income anywhere around the world that doesn't have huge risk outside of Greece and some of the other countries. But in some of the industrialized nations, their rates are so low. So you have to go into the marketplace in order to get some kind of a yield.
All right, so let's say she's, you know, or the interpretation is right, and the market seized on her saying maybe not a lot more hikes, and that's my interpretation. I could be very wrong. Then how does that affect what you're doing, what the markets are doing, what investors can look forward to?
Well, she, I think, referenced that she sees many more hikes to come, I think is what she said, something to that effect. And when I take that, now that doesn't mean that interest rates are going to 10%, but when you see many more hikes, on a percentage basis, Neil, where their interest rates are at today is so historically low that the percentage could be magnified to a point where it is very meaningful. So if you got to 1 or 2%.
She also said, and this is a short-term world, but I want to be clear, that she also said the Fed may not need to hike rates much more. They're talking about the near future, I assume the next year. Could the markets live with that? Are they expecting maybe one hike and then bets are off for next year, but for now they're focused on limited hikes this year?
I think the market is a little frustrated with what the Fed has said over the last several years, Neil. So the Fed said they wanted to see certain economic factors happen, including unemployment. A lot of those factors were in the marketplace, including unemployment and no inflation, and the Fed still did not move rates. That confused the market. I think the Fed chairwoman has to be very, very careful not to confuse the markets again. We're sitting at very historic levels on equities, and we're sitting at historic levels on rates. So whatever she says, she has to be careful with, because she cannot confuse the market again.
You know, there are a lot of people who always sort of say, all right, this market, you know, commodities notwithstanding, in your particular area of expertise, that it's run far and fast without barely a pause, and that we're due for just on historical standards. Do you agree with that? And if so, is it a fall event when the Federal Reserve starts unwinding, or what's your sense?
Well, I actually think we've already seen it when you look at some of the asset classes we trade, Neil, if that's what you're referring to. When you look at the energy sector in general, you know, oil traded between $90 and $94 a barrel forever, and then all of a sudden it trades $26.50 a barrel one day, and everybody goes, I didn't see that coming, because everybody bought the break all the way down, and now oil's trading around that $45 a barrel. So we have seen that through this period of uncertain times, or uncertain times within the Fed.
but we haven't seen it into the metals. We haven't seen this if you're concerned about, for example, global crises. And we see a little bit when we see the, a dust up with the North Koreans or all of it. There's a brief run up, then it runs down. But what do you think's going on there, or beneath the scene? Is there something that we're missing?
Well, I think that's really interesting, that, Neil, what you raised, especially with the metals, because if you look at the price of gold today, just around $1,200 an ounce, and if you look at back in the early 80s, it was trading around $800 an ounce. So if you adjust for inflation, you should have gold somewhere around $2,000 to $3,000 an ounce, but we don't. And then you look at what's gone on in the world, and it should probably be at $5,000 or $6,000 an ounce, but it's not. So the reason is, I think a lot of us have become so jaded, and whatever happens in the world, it's like yesterday's newspaper in 5 minutes. So people are dismissing some of these events to a point where one day you won't be able to dismiss them, and you'll see a huge move in some of these precious metals and other products.
I know you and I are sounding like the Cocoon Club here, but I think a lot of young investors, they don't remember that a lot of this stuff that historically we have, resisted of late, but you haven't resisted, the simple fact that markets do go up and they do adjust and they obviously do change.